Here are a few important questions and answers for the Texas Real Estate Commission licensing exam on the real estate calculations topic. Let's begin. How do you calculate the annual property tax if the assessed value is $250,000, and the tax rate is 2.5%? To calculate the annual property tax, multiply the assessed value by the tax rate expressed as a decimal, which is $250,000 by 0.025, equals $6,250. How do you calculate the capitalization rate, cap rate, for an investment property? To calculate the cap rate for an investment property, divide the net operating income, NOI, by the property value, expressed as a percentage. The formula is NOI, property value, x 100%. How do you calculate the gross rent multiplier, GRM, for a rental property? To calculate the GRM for a rental property, divide the property price by the gross annual rent, which is property price, gross annual rent. How do you calculate the break-even point for a rental property? To calculate the break-even point for a rental property, divide the total annual expenses by the gross rental income, which is total annual expenses, gross rental income. The result represents the percentage of the rental income needed to cover the property's expenses. How do you calculate the loan-to-value, LTV, ratio for a mortgage loan? To calculate the LTV ratio for a mortgage loan, divide the loan amount by the appraised value or the purchase price, whichever is lower. The result is expressed as a percentage. How do you calculate the debt-to-income, DTI, ratio for a mortgage application? To calculate the DTI ratio for a mortgage application, divide the total monthly debt payments by the gross monthly income, which is total monthly debt, gross monthly income. The result is expressed as a percentage. How do you calculate the effective gross income, EGI, for a rental property? To calculate the EGI for a rental property, subtract the vacancy and credit loss from the gross potential income, which is gross potential income, vacancy and credit loss. How do you calculate the net operating income, NOI, for an income-producing property? To calculate the NOI for an income-producing property, subtract the operating expenses from the effective gross income, which is effective gross income, operating expenses. How do you calculate the discounted cash flow, DCF, for a real estate investment? To calculate the DCF for a real estate investment, estimate the future cash flows, adjust for inflation, and discount them to their present value using a discount rate that reflects the risk of the investment. How do you calculate the return on investment, ROI, for a real estate investment? To calculate the ROI for a real estate investment, divide the net profit by the total investment cost, expressed as a percentage. The formula is net profit, total investment cost, x 100%. What is the formula to calculate the monthly mortgage payment? To calculate the monthly mortgage payment, use the amortization formula, PXR, 1 plus Rn, where P is the principal, R is the monthly interest rate, and N is the total number of payments over the life of the loan. What is the formula for calculating property taxes? To calculate property taxes, multiply the assessed value of the property by the millage rate and divide by 1,000. How do you calculate the gross rent multiplier, GRM? To calculate the gross rent multiplier, GRM, divide the property's sale price by the annual rental income. What is the formula for calculating the capitalization rate, cap rate? The capitalization rate, cap rate, is calculated by dividing the net operating income, NOI, by the property's value or sale price. What is the formula for calculating the debt coverage ratio, DCR? The debt coverage ratio, DCR, is calculated by dividing the net operating income, NOI, by the property's annual debt service. What is the formula for calculating the cash-on-cash return? The cash-on-cash return is calculated by dividing the annual pre-tax cash flow by the total cash invested. How do you calculate the return on investment, ROI? To calculate the return on investment, ROI, divide the profit or return by the cost of the investment and express it as a percentage. What is the formula for calculating the loan-to-value, LTV, ratio? The loan-to-value, LTV, ratio is calculated by dividing the loan amount by the appraised value or purchase price of the property. How do you calculate the internal rate of return, IRR? The internal rate of return, IRR, is the discount rate that makes the net present value, NPV, of all cash inflows equal to the net present value of all cash outflows. What is the formula for calculating the present value of a future cash flow? The present value of a future cash flow is calculated by dividing the future cash flow by the discount rate plus 1 raised to the power of the number of periods. How do you calculate the future value of an investment? The future value of an investment is calculated by multiplying the present value by the interest rate plus 1 raised to the power of the number of periods. What is the formula for calculating the cost approach to property valuation? The cost approach to property valuation is calculated by adding the estimated value of the land to the cost of replacing the improvements, less depreciation. What is the formula for calculating the adjusted basis of a property? The adjusted basis of a property is calculated by subtracting the accumulated depreciation from the original cost of the property. Please refer to your handbook for updated and detailed information and revisit this video for revision as you feel necessary. Good luck for your licensing exam.